My name is Katrina Canshaw from BSHM2B. What are risk measure? Risk measure are statistical measures that are historical predictors of investment risk and volatility, and they are also major components in modern portfolio theory (MPT). There are 5 principal risk measures, and each measure provides a unique way to assess the risk present in investment that are under consideration. The 5 measures includes alpha, beta, R squared, standard deviation, and Sharpe ratio. It is only a measure that is used to determine the amount of an asset or set of assets to be kept in reserve. The purpose of this reserve is to make the risk taken by financial institutions such as banks and insurance companies acceptable to the regulator. Alpha. It measures risk relative to the market or a selected benchmark index. It is only the risk of comparing two different set of data and determining that the differences are significant, when in fact they are not significant. For example, this can occur when a team looks at data from a current operational process and the possible outcome if they change an aspect of the process. Beta. It measures the volatility of a fund in comparison to the market or the selected benchmark index. It is the statistical measure of the volatility of a stock versus the overall market. R squared. It measures the percentage of an investment movement attributable to movements in its benchmark index. An R squared value represents the correlation between the examined investment and its associated benchmark. R squared is one of the statistical tools to measure the risk of a mutual fund. R squared compares the performance of a mutual fund scheme to a given benchmark index. Standard deviation. It is a method of measuring data dispersion in regards to the mean value of the dataset and provides a measurement regarding an investment volatility. It is only a statistical measurement of how far a variable, such as an investment return, moves above or below its average mean return. Sharpe ratio. It measures performance as adjusted by the associated risk. This is done by removing the rate of return on a risk-free investment. The Sharpe ratio is one of the most widely used methods for measuring risk-adjusted relative returns. It compares a fund's historical or projected returns relative to an investment benchmark with the historical or expected variability of such returns.
Accounting cycle. It is a set of steps that are repeated in the same order every period. The culmination of this step is the preparation of financial statement. It is a comprehensive process designed to make a company financial responsibilities easier for its owner, accountant, or bookkeeper. Ang accounting cycle, ito ang isang proseso na may pagkakasunod-sunod at ito ang ginagamit upang makabuo ka ng isang financial statement. 8 steps in accounting cycle. Number 1, identify and analyze transaction. Number 2, record journal entries. Number 3, post to the general ledger. Number 4, prepare adjusted trial balance. Number 5, make adjusting entries. Number 6, prepare adjusted trial balance. Number 7, prepare financial statement. Number 8, make closing entries. Identify and analyze transactions. A business starts in accounting cycle by identifying and gathering details about the transaction during the accounting period. When identifying a transaction, you'll need to determine its impact. Transactions include expenses, assets, acquisition, borrowing, debt payments, debt acquired, and sales revenue. Number 2, record journal entries. The next step is to record your financial transactions as a journal entries in your accounting software or ledger. Post to the general ledger. One transaction are recorded in journal. They are also posted to the general ledger. A general ledger is a critical aspect of accounting serving as a master record of all financial transactions. The general ledger breaks down the financial activities of different accounts so you can keep track of various company account finance. Prepare adjusted trial balance. It helps to ensure that the total debit is equal to the total credit of your financial record. If they don't, something is either missing or misaligned. Make adjusting entries. The step identifies error or anomalies that may have occurred until this point by lining debits and credits from various accounts in a single spreadsheet. If the number don't balance, a bookkeeper or accountant will need to review the transaction data entered into the journal and adjust entries accordingly. Prepare adjusted trial balance. When the accounting period ends, you'll adjust journal entries to fix any mistake and anomalies found during the worksheet analysis. Since it's the final step before creating financial statement, you should double check everything with the help of a new adjusted trial balance. Prepare financial statement. One adjustment are made and account balance have been corrected. Financial statement can be created. Financial statement are accounting reports that summarize a company activities and performance for a defined period of time, such as monthly or quarterly. There are three key financial statements that companies generate are the income statement, the balance sheets, and the cash flow statement. Make closing entries. This is the final stage of the accounting cycle lacking in the accounting period. Closing the book resets temporarily account on the income statement, such as revenue expenses, to zero balance, meaning that they don't carry into the next accounting period. Number 1. Dito kasama sa transaksyon ang mga gastos, pagkuha ng asset, paghiram ng pambayad ng utang, mga utang na nakuha at kita sa benta. Number 2, pagtukay sa mga record na transaksyon ng isang kumpanya at ng isang journal entry. Number 3, transaksyon ay dapat na susulat or nakalista mula sa isang journal ang pangalan, account number at credit ng umutang dahil ang journal ay nagbibigay ng kumpletong detalye ng isang transaksyon sa isang entry. Dagdag pa dito, ang isang journal ay bumubuo ng mga batayan para sa pagkuha ng transaksyon sa kani-kanilang mga account ledger. Number 4, ang adjusted trial balance ay nakakatulong upang matiyak na ang kabuuang mga debit ay naibigay ng isang tao sa kanilang account ay katumbas ng kabuuang mga credit. Number 5, tinutukoy dito ang mga error at anomalya na maaaring maganap sa isang account sa pamamagitan ng pagsasaayos ng mga debit at credit mula sa iba't ibang account sa isang spreadsheet. Number 6, dito nakalista ang iba't ibang gastos ng isang account na hindi pa naaayos or nakukumpleto, yung may mga transaksyon na isang kumpanya. Number 7, nakapaloob dito na ang isang account ay dapat tama ang balance at maaaring gumawa ng isang financial statement ang isang kumpanya na maaaring makabuo ng buwanan or quarterly. And number 8, dito pinapakita kung ano-ano ang nagastos at kita ng isang kumpanya or negosyo, kung kumita ba ito or wala silang kinita ang balance ng isang kumpanya.
Business Finance Hospitality Management Program. Angeles Terrado III from BSHM2B. Accounting versus Finance. Accounting is all about the record-keeping transactions. It is concerned with the preparation of financial reports or financial statement, like finance management of money, funds, or resources. For review, analyze, and interpret the financial statement. Alright. Financial management, to collect a fund for a company at a low cost, who use the collected funds for earning maximum profit, to plan and control the finances of a company, deals with the decisions that are supposed to maximize the value of shareholders' wealth. Organizational structure of the company is important, especially in the financial aspect of the business and the particular set of people which play a role in the decision making of the company. Shareholders, board of directors, president. Shareholders and board of directors is the owner. Vice President for Marketing, Vice President for Finance, Vice President for Production, Vice President for Administration. Shareholders. The shareholders elect the Board of Directors, BOD. A share held is equal to one voting right since the shareholders elect the BOD. The responsibility is to carry out the objective of the shareholders. Otherwise, they will not be elected in the position. Board of Directors. The Board of Directors is the highest policy making body in a corporation. The board's primary responsibility is to ensure that the corporation is operating to serve the best interests of the stakeholders. Company President. The roles of president in a corporation may vary from one company to another, representing the company in the professional, social, and civic activities. Vice President. The Vice President usually supports the President by the overseeing internal operation and staffing, and when President is unavailable, the Vice President has a top-level leadership role in a company and oversees department managers. Role of financial managers. Number 1. Financing decisions include making decisions as to how to finance long-term investment and working capital, which deals with the day-to-day operation of the company. Investing decision. To minimize the probability of failure, long-term investment have supported by a capital budgeting analysis. Operating decisions deal with the daily operation of the company, especially on how to finance working capital accounts such as accounts receivable and inventories. For dividend policies. Dividend is a part of profits that are available of distribution to equity shareholders. The finance manager must decide whether the firm shall distribute all the profits or retain them or distribute a portion and retain the balance. Example. Financial institution versus financial instrument. Financial market. Financial institutions are companies in the financial sector that provide broad range of business and services, including banking, insurance, and investment management. Mga example nito yung bank, BDO, BPI, China Bank, Land Bank, PS Bank, Robinson Bank, basta lahat po ng nagpapautang. Social Security System. Okay. Ang number 1 natin example is like commercial banks. Individual deposit funds at the commercial banks which use the deposited funds to provide commercial loans. To firm the personal loans to individuals and purchase. Debt securities issued by firms or the government agencies. Insurance companies, individual purchase, insurance life, property, and casualty, and health protection with insurance premium. The insurance companies pools this payment and invest the proceeds in the various securities until the fund needed to pay off claim by policy holders. Mutual funds. Mutual funds owned by investment companies that enable small investors to enjoy the benefits of investing in the diversified portfolio of securities purchased on their behalf by professional investment managers.